XRP World War III and a Clarity Act update. We got it for you here on this Saturday, March 14th, 2026. Greatly appreciate your support in allowing me to take a few days paternity leave as we bring baby number 3 into this crazy reality. What a time to be alive and what a time to be bringing babies into the mix. Just feeling so blessed and so grateful. A huge shout out to my wife. She is amazing. Huge shout out to the doctors and the nurses, but it feels so good to be out of that hospital, back home, back in the action with my family. And I just praise God. Amen. And God bless all of it. It's been incredible. But let's get right back into it, folks. This market doesn't slow down for anybody. The war not slowing down for anybody. And so we're going to break down what kind of took place over the past few days to finish off this week, what we're expecting next, and as always, how to take advantage of the greatest transfer of wealth in world history. If you haven't already, please help us out by sharing the message and make sure you have subscribed and hit that notification bell. Some people have been saying that they haven't been getting the notifications. They haven't been seeing my videos. So make sure you're subscribed. Make sure you hit that notification bell. Let's get right on into the update. We got a lot to catch up on. U.S. financial funds posted a record $3.8 billion outflow in the week ending Wednesday. This surpasses the previous record set during the April 2025 sell-off, the 2022 bear market, and the 2020 simulation crash. As a result, the 4-week moving average of outflows is up to $2 billion, the largest since 2022. Furthermore, bank loan funds recorded a $2.5 billion outflow, the highest since April 2025. This also marks the third largest weekly withdrawal since 2020. Investors are dumping financial stocks at a record pace. So people are leaving the financial stocks, and then people are also leaving private credit funds, right? The headlines have been hitting one after another. This firm has to halt redemptions. This firm is able to fulfill the redemptions, but it's 7, 8, 10, 14% of their fund is hitting the exits. And so the ripple effect is here when it comes to the liquidity crisis and people wanting their money back out of the funds that were giving them a little bit more return than the average that you would get in the market. Why? Because you were taking on additional risk. And we hadn't seen any issues in private credit. The financials were still strong. The music was still playing and the drinks were flowing. The party's over. Okay? And so we have the London Stock Exchange Group seeking to sell as much as $3 billion of quote-unquote high-grade U.S. corporate bonds as soon as early next week. Now, when the high-grade funds are seeing the exits, you can see how quickly this is spreading. Now, what's so fascinating about this is that we see an opportunity. 401ks are now available. It's now available to invest in. It's more accessible for crypto, for precious metals, for private equity, for private credit, and alternative investments overall. And we cheered President Trump making that available. But as always, you need to understand what you are investing in, right? Just because you can invest in crypto, precious metals, private equity, private credit, doesn't mean that you should. It means that you should understand those investments. And there could very well be an opportunity. We believe so. Most of my net worth is in crypto. But we do probably, the most due diligence, compared to the average investor that goes into crypto. The level of due diligence that we conduct before we move is substantial. And the problem that I see now is that half of America doesn't even know what their 401k is invested in. So as the 401ks become exit liquidity for the private credit, private equity, and other markets, I'm worried about the average American retiree getting caught holding the bag. So Trump signed an executive order letting 401ks invest in private markets, and the industry spent months and maybe even years lobbying for this. The timing is incredible. They're opening the door to retail retirement money at the exact moment that semi-liquid funds are gating redemptions. BDCs, which is business development credit, are cutting dividends, and the private credit market is in a trust crisis. It's a liquidity crisis. The smart money needs exit liquidity, and the 401ks are arriving. So I just encourage you guys. I'm not saying you should stay away from these alternative markets, these alternative funds, crypto, precious metals. We love it. Private credit, private equity, we love it. but we love a small fraction of it. 99% of crypto goes away. 99% of private credit and private equity might not make it. And that's what we want to really emphasize. We want to underscore that point, is that yes, we love that President Trump made 401ks accessible for, retirement, for these types of alternative investments. But are you conducting due diligence? Do you even know where your 401k is at? Let me know in the chat below. Bringing it back to the Japanese carry trade unwinding, we have the Bank of Japan meeting the same week as the Fed. That's going to be taking place this next week, March 17th and 18th, where we get decisions from both central banks. Now, as Michael Gayed says right here, the rate in Japan is 75 basis points, and they're expected to hike to about 1% by June. 35 trillion yen in carry trade forwards if Bank of Japan hikes, the unwind starts. The problem here is it's very tough to gauge how far this spread, right? How far did it go? Same thing in the private credit market right now too, right? It started with a few small players, Blue Owl, etc., and then it winds up with BlackRock, Blackstone, and some big boys saying, hey, we're going to have to take it easy on the redemptions, right? Now we're looking at this Japanese carry trade starting to unwind again. And we were talking about this for the past few years, and really for the past 2 years. And we really was a highlighted point back in July and August of 2024. This is when it started to blow up. Bank of Japan came in. They had to kind of intervene, and it cooled things off for temporarily. Now it's coming back. And the issue is oil spiking, right? Priced in Japanese yen, is bringing inflation back to the island of Japan, or the series of islands, right? So once again, all of the central banks, not just the Bank of Japan, not just the Federal Reserve back here in the United States, all of the central banks are faced with the issue of unwinding all of this leverage in the system, in the financial markets, private credit, private equity, crypto. We ripped the Band-Aid right off. The good thing about crypto is that we unwind the leverage very quickly. It's all automated through the DeFi, or a lot of it is. So we just rip the Band-Aid off and we nuke our crypto markets. Meanwhile, the way that it's done in the traditional markets, they actually halt redemptions, right? Some private credit funds only allow you to withdraw 5% per quarter, right? And we're seeing this. And a lot of that's built in. And the shame is that a lot of people don't even know the rules of the funds that they're invested in. So they go to pull money out of a fund, and then the fund says, well, we have a 90-day withdrawal period. And after the 90 days, then we don't let you get your money till the end of the next quarter, because we only do quarterly redemptions. On top of a list of other rules, requirements, and ways that these funds kind of stall you out from getting your money today. Much different from the DeFi environment that we have in crypto, where it's all algorithmically set in place with smart contracts, etc. And so as those get triggered, you get liquidated and either your money's taken away or you can pull your money out right away. But we're going to find out. We're going to find out. We have been messing around, and we're about to find out how deep this goes. The carry trade in Japan, the private credit crisis back home, and we're also about to find out how far this war is going to go too. So this week coming up, Bank of Japan, Federal Reserve, interest rate decisions coming up. Let's watch closely. I believe that we're going to get a pause from both. No move from either one. Okay, we'll see. We also just got another Kramer kiss of death saying that he's not buying the 2007 scenario, which tells us that we got a 2007 scenario happening right now. And as I've been saying, it's not the same as the Great Financial Crisis, it's worse. And to the point that I've been saying here, we don't know how big it is. Is it 5 times worse than the Great Financial Crisis? Is it 10 times? Is it 100 times worse than the Great Financial Crisis? We're about to find out. And I hope that you're ready to go on this journey with me. It's going to be fun, going to be a little bit bloody. But if we can survive, and if we are positioned to take advantage of it, if we are the ones with a little bit of cash, a little bit of liquidity, ready to buy the blood in the streets, even if some of that blood is our own, on the other side of this, on the other side of them turning back on the money printers, on the other side of them taking interest rates back down, our assets are going to appreciate just like they did after 2020. And you do not want to miss that opportunity. That opportunity is here now. Now's when you buy. Right? You make your money when you buy, not when you sell, when you buy. And it's the most difficult to be buying right now when it feels like the world might be coming to an end, just like it did in March of 2020. See, we just came up on the anniversary, March 12th, when they sent everybody home, when they said it's the end of the world. And I'm kind of joking, tongue in cheek about that. But think of how you felt in your gut. Think of how you felt when you went to hit the button and to hit buy and you were scared and you didn't take action and you missed the lows of March 2020 before we went nuts, before we had an epic, euphoric bull run. That's coming. On the other side of this carnage, chaos, will be order. And order will be, what will be sacrificed to bring order is inflation and your purchasing power. So if you don't own assets, you will be left behind. So the other thing that we're about to find out now too is that we are going to be putting boots on the ground. In my opinion, we are not pricing in the announcement, which will shock markets and bring it back down further, when the United States admits that we are going to be putting boots on the ground. Now, I'm not just saying this. The Pentagon has approved deployment of a Marine expeditionary unit of about 2,500 Marines to the Middle East. This is from the Wall Street Journal. Now, this came out yesterday, and it actually got up to 5,000. Now, this is how we started the Vietnam War, by the way. For any of you history buffs, maybe you know this. This started the Vietnam War. We sent in, a little bit of Marines to go get it started before we got into the Vietnam War. And so I don't think that the market is pricing in how big the private credit crisis is. The market is not pricing in how deep the Japan carry trade unwind goes. And the market's not pricing in U.S. boots on the ground and that announcement hitting. The market is also not pricing in this war going out past the end of this month. Just like in 2020, right? In February, it was, there's a little issue going on in China. There's a little issue here. It arrived in my neck of the woods in the Pacific Northwest. A little something's here. Not a big deal. 2 weeks to stop the spread. Not a big deal. Feels awfully similar to what's taking place with this war right now. And even I will admit that even I thought that this was going to be a little bit faster and quicker of I wouldn't even call it a war, a conflict, than what it's becoming. It's quickly escalating with no end in sight. No off-ramp really available. And we're seeing some interesting reports coming out right now. Netanyahu was missing at the Israeli security briefing that came out here today. Israel's defense minister, Katz, led today's security briefing with Bibi noticeably absent. Now, rumors have been swirling that Netanyahu was either injured or killed in a March 9th strike. Completely unconfirmed, just rumors for right now. But can you imagine the chaos that could follow up after this? With Israeli Army Chief of Staff saying that stopping the fighting now is a mistake, and we are prepared with combat plans until Passover in mid-April next year. They're ready to go a year. Now, is that just posturing and playing tough? Or are they serious about, hey, this might go on? Because I have a feeling it might be the latter. And the market is definitely not pricing in that. And specifically to oil, specifically to stocks, right? That is not being priced in right now. By the way, this is what sends gold to double up again to 7,000 to 8,000 per ounce, by the way. Yeah, that's coming. Serbia. And here's the other thing that's not being priced in. So once again, private credit not being priced in. How deep that goes. Carry trade unwind, how deep that goes not being priced in. U.S. boots on the ground, when that announcement hits, markets are coming back down. How long this war is going to last not being priced in. And then this war spreading to other regions, new conflicts arising outside of the Middle East, that's not being priced in either. Serbia prepares for war. Serbian president stated that Croatia, Albania, and Kosovo are allegedly preparing to attack Serbia. According to him, these countries, quote, are waiting for an escalation of the conflict between Russia and Europe and hope that global chaos and the war in the Middle East will provide them an opportunity to act. Vucic also confirmed that Serbia possesses hypersonic ballistic missiles and emphasized that the country has no intention of joining NATO. We also just got reports that Iran is considering striking Ukraine because Ukraine's going to come help defend against drones, help Israel. And so Iran is now saying that the entirety of Ukraine is open target, open season. Here's your update now on the Clarity Act. And I wish that I had some good news for you here, but we're still stalled out and we're still on the end of April timeframe for Clarity Act getting done. Eleanor Terrett, Senator Majority Leader Thune, told Brendan Peterson he doesn't expect the Clarity Act to pass out of the Senate Banking Committee before April. Now, that is worse than what we were hearing from Brad Garlinghouse and others who are saying that 90% chance that this gets done by the end of April. If this doesn't get out of committee till the end of April, well, then we would be, April, May, June before the Clarity Act gets done, right? Because we got to pass it in the Senate Banking Committee before it goes to a full Senate vote, and then they have to reconcile the Senate version of the bill with the House version of the bill. Once that gets done, then we can send it off to President Trump's desk for signing into law. So right now, if you had to ask me, when is Clarity Act getting done? Is it going to be done before the end of April? No. That's my answer. This war, which Brad Garlinghouse made his statements about 90% odds before the end of April, kind of before this war got going. So, in his defense, our Congress is now dealing with the war, amongst other issues as well, before they get to Clarity Act, and that being a priority right now in D.C. So the update on Clarity is don't expect it done before the end of April. The good news, because you're telling me, Zach, this is all bad. It's all, well, the world is crazy. The world is crazy. And it takes a special kind of crazy person to see the opportunity in it. Once again, praying for peace. I'm just trying to keep the peace in my household with 3 children now. We're trying to keep the peace around the world. We're trying to unwind these markets and have a soft landing. It's easier said than done. Taking care of 3 children, easier said than done. But if you can find the opportunities now, which is looking across the markets, looking across the fundamentals, and finding what is still discounted, what value is still discounted. In my opinion, digital assets are still discounted because people are now going to say, oh, Clarity Act's not done for a few months. I'm not going to buy crypto now. No, now is the time to buy before the Clarity Act gets done. It will move before the Clarity Act gets passed. Mark my words, I've been saying that. Markets move on the expectations of what happens next, right? So you got good digital assets that are discounted right now. You might even have some good stocks that are discounted right now and will continue to be discounted as the market bleeds out a little bit further, right? We need to digest some of these bad things a little bit further. We haven't done that. We've taken a sample of private credit unwinding. We've taken a sample of the carry trade unwinding. We've taken a sample of the war going on and the idea that maybe some boots are going to go on the ground. Maybe this could spread to other regions around the world. We've taken a sample of those. It's time to sit down, eat the whole meal, and digest it, right? And you're going to have to work through some bad parts of that meal. But the good part, right, the cherry on the top of your dessert is going to be buying the bottom of the bear market on these digital assets before we go back into a historical bull run. It's just that simple. That's what I'm doing. I'm going to continue to do it. And I encourage you guys to take a good, hard look at your portfolios right now. Cut off the stuff that's already had a great run, that's overvalued, and is going to be unwinding and bleeding out. That might be some stocks. We're seeing hardship withdrawals out of 401ks at a record level. The liquidity crisis is here. This is why I've been stacking my cash in preparation for this exact moment. But to me, it feels like we're in a deny. It's not happening. It's going to be over in a couple weeks. And we need to accept that this is going a little bit further. The private credit crisis goes a little bit deeper, and we need to prepare accordingly. Now, if you guys haven't already gotten exposure to digital assets or precious metals in your retirement funds, we want to let you guys know that that is now available through our sponsor, iTrust Capital. So if we move on over here, I have them linked up at the top of the description. When you use my link, you will get a $100 funding bonus, but they have the IRA product along with the premium custody account And the new product that they just rolled out, I'm very happy with this one, is the treasury account for your business, your trust, or your nonprofit. Absolutely love to see it. But just as a reminder here, you have another month basically between now and tax day, April 15th, 2026, to fund your IRA for 2025. So take advantage of that. If you have 401k, you can't get it into crypto right now, our sponsor, iTrust Capital, will help you roll it over from a 401k into an IRA, get exposure to precious metals, get exposure to good digital assets. In my opinion, precious metals like gold and silver still undervalued. Good utility digital assets, XRP and others, still very undervalued, okay? So we're going to be back in the markets here this coming week. Make sure you guys stay tuned. Like I said, subscribe, hit that notification bell so you don't miss any of our updates. We're going to keep it coming for you guys. We are back. This market's moving quickly. Going to take advantage of it, and we'll keep you guys updated this entire time. Appreciate your support. God bless you all. We'll see you guys in the next one. Take care. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.